One of the most important tasks when starting a new business is choosing the right company structure. Keep watching to find out more. Hi there, Chloe Zaytounian here from Rapid Formations, the UK's leading company formation agent. Starting a business is an exciting time, but it requires considerable research and meticulous planning to give yourself the best chance of success. One of the first things that you will need to consider is how to structure your startup. In the UK, there are 4 main types of business structures that you can use: sole trader, general partnership, limited company, and limited liability partnership. In this video, we will provide a brief overview of each one, including the taxes you will pay, your liability for business debts, and how to register your chosen structure. Let's get started with our first structure, the sole trader. This model is the simplest and easiest one to set up and operate. If you register as a sole trader, you will be a self-employed individual who owns and runs the entire business. However, you can still employ other people to work for you. Any profit you make will be liable to income tax, in addition to Class 2 and Class 4 national insurance contributions. You will report and pay tax on your sole trader earnings through self-assessment after the end of each tax year. You must also register for VAT if your business turnover is more than £90,000. If it is less than that, you can register voluntarily. Doing so may be beneficial if, for example, you buy goods or services from other VAT-registered businesses. As a sole trader, you have unlimited liability. This means that you are personally responsible for all business debts, contractual obligations, legal claims, and any losses. So, how do you set up a sole trader business? This is a quick and easy process. You simply need to register for self-assessment with HMRC. The deadline is the 5th of October after the tax year in which you start trading. The current tax year is the 6th of April 2024 to the 5th of April 2025. To register, you will need to create a government gateway user ID and password. HMRC will then send you a unique taxpayer reference by post within 10 working days. This is used to identify you for tax purposes. After the end of each tax year, you must complete a self-assessment tax return for HMRC and pay any tax and national insurance contributions that you owe on your sole trader profits. Now, let's move on to our second structure, a general partnership. This is a traditional business partnership consisting of 2 or more partners who jointly own and operate the business. Each partner is registered as self-employed and pays income tax and national insurance contributions through self-assessment on their share of the profits. They also have unlimited liability, which means every partner is personally responsible for all business debts, contractual obligations, legal claims, and any losses. You can employ other people to work for your business, and it is also possible for a corporate body, for example a limited company, to be a partner in a general partnership. To set up a general business partnership, you will need to register the partnership for self-assessment with HMRC. Each partner must also register individually for self-assessment. After the end of each tax year, you must send a partnership tax return to HMRC. Additionally, each partner must complete their own self-assessment tax return to report and pay personal tax on their share of the profits. You will need to register for VAT if the partnership's turnover is more than £90,000, or you can register the business voluntarily if it is beneficial to do so. Next up is the limited company structure. Companies can be limited by shares or limited by guarantee. The former is used by profit-making businesses, whilst the latter is more commonly used by not-for-profit ventures. Limited by shares companies are owned by 1 or more shareholders, and they are managed by 1 or more directors. Limited by guarantee companies have 1 or more guarantors, rather than shareholders, and they are managed by 1 or more directors. A limited company differs from the sole trader and general partnership structures because it is incorporated as a legal person in its own right. This means that it has its own legal personality, entirely separate from the people who own and run it. Consequently, the shareholders or guarantors are not personally responsible for the company's debts, contractual obligations, or legal claims. They have what is known as limited liability, meaning the extent of their liability is limited to the amount of money that they agree to pay for their shares if the company is limited by shares, or provide as a guarantee if the company is limited by guarantee. You can be a sole shareholder or guarantor and director of either type of company, or you can set up and run the business with other people. It is a very flexible business structure. Companies pay corporation tax on the profits they make. On a personal taxation level, you can take a director's salary, on which you will pay income tax and national insurance contributions. As a shareholder, you can also pay yourself dividends, which attract a lower rate of personal tax. As with the other structures we've looked at, depending on business turnover, VAT registration may be compulsory or voluntary. Setting up a limited company in the UK is a quick and easy process if you register online through a company formation agent like Rapid Formations. You simply need to complete an online application form providing a unique company name, a registered office address, and information about the person or people who will own and manage the company. Your application must be submitted to Companies House for approval by your company formation agent. Typically, this takes up to 24 hours, after which time your company will be ready to start trading. In addition to registering the company with Companies House, you will also need to register the company with HMRC for business taxes, as well as register with them in a personal capacity for self-assessment. Lastly, on limited companies, it is worth pointing out that they have more administrative obligations than sole traders and general partnerships, including keeping statutory company registers, filing confirmation statements and annual accounts, and maintaining certain details on the public register at Companies House, and more. Lastly, let's take a look at the Limited Liability Partnership, or LLP structure. This is a unique business structure that combines the key characteristics of a general partnership and a limited company. It is incorporated as a legal person, separate from the partners who own and manage the business. Each member is self-employed and pays income tax and national insurance contributions on their share of the profits, but they also enjoy limited liability for the LLP's debts, contractual obligations, and legal claims. An LLP is ideal if you want to run a profit-making business as a partnership, whilst protecting your personal assets. Just like companies, limited liability partnerships must be incorporated at Companies House. The easiest way to do this is to complete an online application through a company formation agent. You will need to provide a unique LLP name, a registered office address, and information about the 2 or more partners who will own and manage the partnership. Companies House approves most applications within 24 hours. You will then need to register the LLP for self-assessment and VAT, if applicable. Each member must also register separately for self-assessment and send a tax return each year to report their share of the profits and pay personal tax. You will also be required to keep statutory LLP registers, file a confirmation statement and annual accounts, and maintain certain details on the public register at Companies House. So there you have it. The type of business structure that you choose for your startup will help determine the tax that you pay, your personal liability for debts and obligations, your administrative responsibilities, and the way in which your business operates and grows. It is possible to change business structures at any time, but transferring assets can be an arduous process. Therefore, it is best to take your time and choose the one that best suits your long-term business plans. If you have any questions, please leave them in the comment section and we'll get straight back to you. In the meantime, we have included several useful links in the description below. Finally, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help and we can't wait to hear from you. See you next time. Bye for now.